So, what are we going to cover as part of this session today? We will be covering different rules, starting with Rule 11U, which is about expressions used for determination of fair market value under different rules under the Income Tax Act as well as under the Income Tax Rule. Then we will understand Rule 11UA, which is about determination of fair market value in respect of different kind of assets. After that, we will talk about Rule 11UA1, and this Rule 11UA1 talks about, or it gives methodology for the determination of fair market value in respect of jewelry, valuation of jewelry, and in respect of valuation of archaeological collections, drawings, paintings, sculpture, or any work of art. And that is the coverage under Rule 11 UA1. Rule 11 UA1 small a is methodology for the valuation of jewelry. Rule 11 UA1 small b is about valuation of archaeological collections, drawings, paintings, sculptures, or any work of art. As to under these situations, how the valuations will need to be done. That is what we are going to cover as part of the Rule 11 UA1. Then we will move to Rule 11 UA1C small c, and this Rule 11 UA1 small c gives the methodologies for the valuation of shares and securities under different situations. Then we move to Rule 11 UA1 small c, small a, and I, valuation of quoted shares and securities when the transactions are done on a recognized stock exchange. So in case if the shares which are being transacted, or the shares that are to be valued are transacted at a recognized stock exchange, in that case how will the valuation be done? Thereafter, we move to Rule 11 UA1C small a, and 2, valuation of quoted shares and securities when the transactions are other than at recognized stock exchange. That means the transaction is about the listed shares, but the only difference is that the transaction is not done at the recognized stock exchange. The transactions in the exchange, in the purchase and sale of the shares, are done outside the recognized stock exchange. If that is the case, how the valuation is to be done? Thereafter, we would look at Rule 11 UA small c small b, and that is valuation of unquoted equity shares. And remember, friends, this is one area which is very, very critical for every one of us to understand, and that is how to do the valuation of unquoted equity share, because that is one area which has been in news for last few years. And the reason behind is because there's a provision under the Income Tax Act where the issue of shares is at a price higher than the fair market value of the shares. Then the difference between the issue price and the fair market value is deemed to be treated as income of the issuing company. And that is what we will understand as to number one, what the provision is, and number two, how to ensure that a company does not suffer on account of this particular rule. That is, it should not happen that excess of the issue price over the fair market value getting treated as income from other sources of the company. Then we come to Rule 11 UA1 small c, fair market value of unquoted shares and securities other than shares in a company. So remember, it's not that the only valuation of equity shares are required in case of unquoted securities. So it is also the valuation of preference shares is also required to be done at times, and the valuation of other securities other than the equity shares and the preference shares is also required to be done. Now, Rule 11 UA1CC talks about the methodology to be followed in case of determination of fair market value of unquoted shares and securities के अलावा जो shares are there, that is about the valuation of that. Then you have Rule 11 UA2, and that is determination of fair market value of unquoted shares applicable in case of Section 56 subsection 2 clause V. And that is where we need to be careful, because what I just mentioned about taxation of difference between the issue price and the fair market value in the hands of the issuing company as other income is applicable with reference to Section 56 subsection 2 clause 7b, and that is what we need to understand, and what kind of precautions need to be taken by such a company so as to ensure that the share capital which is received by the company is not taxed by the tax authorities. We will talk about thereafter why private limited companies and unlisted public companies must be careful before issuing shares at premium, and that is because of the provisions of Section 56 to Section 56 subsection 2 clause 7b. And as I said, as per Section 56 subsection 2 clause 7b, in certain cases when a company is issuing shares at a price which is in excess of the fair market value, then the tax authorities will deem this excess of issue price over the fair market value as the income from other sources and tax it in the hands of the recipient company or the company which is issuing shares. So obviously precautions got to be taken by such a company. What kind of precautions that the company can take, we will talk about it. Then we will discuss about issues, salient features encountered while carrying out valuation for issue of shares as per Section 56 subsection 2 clause 7b. And finally we will understand what is the difference between the valuation as per Rule 11 UA 1 small c small v and valuation as per Rule 11 UA 2. So friends, this is the agenda that we have for our discussion about today. Now before I move forward, in case if you have any doubt, any question on whatever that I have stated just now, you can please raise your question, raise your doubt. I would be very happy to take them, and then we'll move to the next topic.